The Chinese economy has decelerated and begun its descent into the ground. China's economy seemed to float in a no-growth zone for a few quarters as a result of the zero-COVID policy and the real estate crisis. Their economic rocket ship has had to turn back because it was unable to achieve escape velocity. Millions of jobless Chinese, plummeting consumer demand, the growth inversion will be a sight to see. In the late 1990s, when tourists from other countries first started flocking to China, the country's rapid economic development and low inflation rate were awe-inspiring. Those from the countryside have migrated to the coast, where they now live in industrial dormitories and labor 80 hours per week to produce widgets for the rest of the world. Farmers sowed income crops, sold the fruit and vegetables they harvested at newly established free markets, and used the proceeds to purchase land and construct new homes for themselves. It was a fantastic period, spanning 30 years of hope and investment-driven expansion. When the machine began to falter in 1998 and again in 2008, government officials responded by pouring even more money into the economy. Because of the global financial crisis, government officials poured money into real estate out of concern of a collapse in foreign demand. After 2008, the government force-fed the economy with capital to keep the economic engine running, and productivity stalled. Prior to that year, most investment had gone into road, rail, telecom, and computerization, all of which increased productivity. The property collapse of summer 2021 was the last straw that broke the camel's back. Unemployment is now a major topic in the media. According to official statistics, around 20% of unemployed young adults are under the age of 25. While data on the work status of the elderly is sketchy at best, random polls conducted by third parties in rural areas have shown alarmingly high rates of unemployment. Government workers in the most prosperous areas are being asked to take huge salary cuts. Foreign investors believe only 350 million rich individuals in coastal cities count to the economy. Banks, private school, brokerages, and other white-collar companies are laying off large numbers of workers. Tech layoffs are widely reported. Pharma is losing workers. Individual tax revenue is declining. It sounds like a stampede is developing from the shuffle of feet. Companies that were formerly dominant are shedding assets, and Tencent is only one example. Berkshire Hathaway, Warren Buffett's company, is reducing its holdings in BYD, a Chinese manufacturer of electric vehicles. Huawei's founder stressed the importance of survival to the company's workforce. Since the beginning of the year 2022, the profitability of Hong Kong-listed Chinese real estate businesses have dropped by 87%, according to company reports. Less spending is being done. Chinese banks are slashing rates and extending credit to address this. The central bank is battling the depreciation of the renminbi, spending down its foreign currency reserves but projecting it would soon top the long-feared 7-to-1 exchange rate versus the U.S. dollar. In a nation that hasn't reacted to labor changes since 1995, unemployment rate is meaningless. China doesn't count rural folks, that's 60% of the population, or most gig workers. It undercounts persons without labor contracts, which is most urban migrants. We know China will conceal its suffering from the world. However, it's becoming harder to do so as public companies continue to report underwhelming financial results. The vicious cycle of high unemployment, low income, and low expenditure continues. We're seeing a precipitous drop in smartphone sales. In the most recent fiscal period, revenues at Starbucks fell by 40%. China will no longer serve as the world's king of opulent consumerism. Coal, copper, and iron ore are all seeing falling demand. Those in charge in China will be the last to recognize there is a problem. The chief financial officer of Adidas is just the latest high-profile figure to pledge their commitment to the Chinese market. One has to question who exactly they are attempting to persuade. We make daily videos on events that affect your money and future, so if you enjoyed this one, please think about liking or subscribing. See you all in the next one.